Hello everyone and welcome back. My name is Greg Furman, market analyst here at TraderPlanet.com, and these are the market positions for September the 21st, 2010. Now our first position for tonight is going to be again in the US Canadian shorts. We were reluctant to get into shorts on Friday, but again we can see that looking right now, I have the triple EMA crossover up from Vantage Point. I have the predicted short, medium, and long-term differences, along with the predicted MACD and the predicted true strength indicator. Now again, we have this triple EMA cross that's taken place right here back and again about the first week of September. We're moving lower again. We've had two significant retracements coming close to the 18-day predicted moving average from Vantage Point, actually touching it today, and then subsequently closing back down in this 102.83 area. Now what this appears is that we've broken through this little minor support here. We still have the 180 area to contend with, but my view is that we're likely going to see this move on the US CAD extend lower. Crude oil, as I suggested in the Forex weekly outlook, has recovered quite a bit, moving back up over the $76 a barrel today, along with the very strong equity move. So all of these are positive for the Canadian dollar. Now looking at closer at this, we can identify three key levels: 103.57, 103.09, and 102.93, with a close of 102.83. We now want to go into our daily report from Vantage Point and have a very good look at the daily report and see what's actually happening over there, because again we're going to see some volatility with the FOMC tomorrow, but the primary trend here does appear to be down. Now we have the neural index is up. We have our predicted high tomorrow of 103.37, which coincides with that 18-day predicted moving average at the 103.57 level, and for tomorrow we're going to be looking for a move towards the 102.46 area. Now we can see that our predicted short-term difference here is still positive, but we can see that it's less than what it was yesterday. We had 21, we're now down to 12, and the predicted medium and long-term differences remain negative. So again, what we can do here also is we can identify that we don't have any crossovers on the trigger, on the predicted MACD, or on the predicted true strength indicator from Vantage Point. Now our short-term indicator is likely going to tell us that this thing is going to move up. So the question is now, how do we want to play this? Well, we're going to look at the short-term crossover from Vantage Point and do an assessment on this. We can see that the short-term crossed over on Friday, but again, trading off that short-term indicator, what this would do is, it would allow, when it moved higher, it will allow us to get a better position again on our short. Now looking at this, we can see that our medium-term crossover is not suggesting that it's going any higher, and of course our long-term crossover is also going to agree with that. As we can see clearly it does. We have quite a gap here between the standard moving average and the predicted moving average, which is signaling a fairly significant move to the downside may be coming. So for now we're going to play stops fairly tight on this trade though, because again we've got the FOMC tomorrow. Not really sure how much I trust the US CAD, because we can see that it's been trading in these ranges, but with this fresh triple EMA cross to the downside, we're able to clearly identify our levels of resistance here and where we want to get in. So for tomorrow we're looking for a move towards the 103.37 area, the Vantage Point predicted high, and we're going to have our stops about the 104.20 area, just to stay out of that stay out of that broker radar. Now that's our first position for tonight. Now for tomorrow we're going to go back into the 10-year notes. Now specifically the December contracts. What we're looking at here is we're running flat on the Vantage Point, with the triple EMA crossover is running essentially completely flat. Now the predicted true strength indicator is a bit of a concern for me. It's getting ready to cross the trigger in oversold territory, so we could see a little bit of a bounce. But what I want to point out here again is that how long this market has been in a trending move. So I'm going back here 6 months, and we can see that back in April is when we initially got the original buy signal on the 10-year notes, and it moved all the way up. We've been basically moving steadily higher for the last 4 to 5 months. So this triple EMA cross that's just taken place the other week is in my opinion very significant. Now just to further point this out again, what I've done is I've switched this to the long-term crossover, and we can see that the long-term crossover from Vantage Point is still pointing lower. Our predicted medium and long-term differences are still well below the zero line. This, in my opinion, is a corrective move, and the bigger move coming on the 10-year notes is going to be to the downside. So again, looking at tomorrow's trade, getting into fresh short positions is probably a very good idea. So what I'm going to do here is I'm going to bring the daily report up. So anybody who's not already in this position from last week, I'm going to point out where a good potential entry point is for this week. We have 124.24 as the high and 123.29 is the low. My opinion, a slight move towards this 124.24 area. Excellent opportunity for a short. And again, I think what we're going to do is the bigger move is coming potentially after the FOMC. Looks like the equities are already responding to potentially what the Fed chairman is going to say tomorrow. I don't think we're going to have any change in the rhetoric tomorrow whatsoever from the FOMC. I believe that it's going to be negative for the US dollar, positive for equities, positive for commodities. So those are the market positions for September the 21st, 2010. And again, my name is Greg Furman, market analyst here at TraderPlanet.com.